Hey there, good afternoon. First couple videos I've done were more on the conspiracy side of things, and that's kind of what I'm going to talk about most of the time, but I thought I'd throw a little change up in there, or in here, and just talk about something else I'm interested in that's not conspiracy related at all, or anything to do with, our world and, or the flat earth or whatever. But there's something I've always had a real strong opinion about, and this goes back a long time. Back when I used to have an insurance license and an investment license years ago, and it's something that's always bugged me because there's so many people that have been sold a product that lasts and lasts and lasts throughout their life, and it's really not a good deal. And in a lot of cases, it's a real ripoff. And things like that bug me. When companies take advantage of people and they sell them crap, kind of bugs me, rubs me the wrong way. And what I'm talking about is I'm talking about the life insurance industry. The life insurance industry and the insurance industry in general is, one of the richest industries in the world. There's a specific type of life insurance that you've probably heard of, called whole life. In some cases it's called universal life, variable universal life. It goes by many names, but the basic tenet is it's all cash value. Excuse me. It's all cash value life insurance. So I'm just going to make a quick video here and just talk about this because I've never seen a cash value life insurance policy that makes any sense at all. Okay? Most people, when they go looking for life insurance, would never, ever choose a cash value life insurance policy. 99 times out of 100, it is sold to them, So if they go to some place, whatever, I won't name companies here. And first of all, one thing I should have said at the beginning, this video is for informational purposes only. I am not a financial expert. I am not a financial guru, so take everything I say with a grain of salt, okay? So now that we got that out of the way, couple questions. When you go to buy car insurance, for example, you pay a premium, and it's for a period of time, either 6 months or a year. Sorry, I got a little frog or something. And if you get in a car accident or something happens, then there's the insurance there that helps out, depending on the terms of the insurance, right? Do you ever save money with your car insurance? Is there a savings portion? So in other words, if you don't get in a car accident, do you get money back? No, that's not how it works, right? Same with health insurance. You pay a premium, you got to go to the doctor or whatever, the terms of the health insurance will pay certain parts of that, okay? So any other insurance, do you ever save money with insurance? No. What other types of insurance is there? Think of any car insurance, health insurance, whatever. Is there ever a savings account attached to that? No. But that's how whole life insurance is sold to you, okay? Whole life insurance has a face value. Let's just keep it simple and say it's $150,000 face value. That's what the death benefit would be if you happen to die during the period, okay? While the insurance is in force. And then it also has a savings part. The problem is that these two things are mingled and you don't really get a good picture of how much you're paying for insurance and how much you're paying for the savings part of it. Also, if you look at the early stages of a whole life policy, and this is on average, every policy could be slightly different, but this is on average. A whole life policy, the first 2 years, every dime you pump into it goes to the insurance part, okay? And by the way, it makes the insurance agents a lot of money. If you keep that thing in force for a couple years, they are banking a large commission off of that. Probably 50% of the money you're putting in is going right into the agent's pocket that sold it to you, okay? But for the first 2 years, you have a negative 100% return on investment, right? So let's say you're paying in, and I have no idea, every company is different, but let's say you're paying $100 a month for this thing, okay? At least for the first 2 years and sometimes longer, 100% of that money is going towards the insurance. In other words, the insurance is in force, but none of that is going into your so-called savings. Your savings doesn't start to kick in until later, okay? So you start out for the first 2 years with a negative 100% rate of return on your savings. Isn't that nice, right? Think about this. There's alternatives. There's something called term life insurance, okay, which tends to be 2.5 to 3 times cheaper than whole life insurance. You take that difference that you're saving. If you were to go out and get $150,000 on a term life, it'd be $20-$30 a month, depending on how old you are and the health you're in and all that, okay? I'm just giving examples here. These are averages. So what could you do with that extra $75 a month? What could you do with that? You could put that into a separate savings if you chose to. If you had a $100 budget, say you had to spend $30 a month on your term insurance, well, you could take that other $70 and you could save it and invest it. What's the advantage there? You have total control over the savings, okay? You're paying for the insurance over here and you're paying for you're investing over here with your savings. Whole life doesn't let you do that. It bundles the two, and you never really see, and they may promise you, through the life of this policy, you'll get 6 to 8%. Well, that's only if you hold it for like 20 or 30 plus years. You got to hold this, and that's why they call it whole life. They want you to have it for your whole life, okay? And it's sold by an insurance company. Why would you save money with an insurance company? Oh, and I'm forgetting one of the most amazing things why you would never want to own one of these things, okay? You're paying for insurance and you're paying for a savings plan. But guess what? You don't get both. If you die, it says this right in every policy. If you die, you get the death benefit, or your survivors get the death benefit. Any savings that accumulated, well, the insurance company just keeps that. That is absolutely the way it works. Flip side of that, if you live to age 65 or whatever, they'll keep this in policy in force for forever, right? Now, but at age 65, I think the premium starts to go up because life expectancy obviously starts to go down. It's all based on actuarial tables and so on. But if you ever want to take money out or cancel the policy at some point and cash in your savings, well, then your insurance goes away and then you can have what's in the savings. But if you run numbers, say you put $100 a month into this thing for forever, you may eventually build up $100,000 in savings or $150,000 in savings. But if you were to buy term and invest the difference, you would literally have so much more money in your investment. It's ridiculous. Okay. So that's another big key is you're way overspending for the insurance. The savings is terrible. You're maybe getting 6% on your money, but only if you hold it for 20 or 30 years or more. Okay. Short term, you're getting basically nothing back. At least in the first 2 years, you're getting nothing back. And if you die, you forfeit the savings, and your beneficiary only gets the death penalty, or the death penalty, the death benefit, right? Sorry. So, it's like getting a death. Yeah. Okay. So anyway, little faux pas there. I knew how to edit. I'd edit that out, but I'm not good at editing yet. So that's something I got to figure out. But so the moral of the story is, should I ever buy whole life insurance or variable life? Now, variable life is basically the same thing. Universal variable life. It's basically the same thing, except they give you the option of taking your savings instead of just getting a fixed rate of return on your savings. You can take that and you can do investments with it, whether it be in annuities, and annuities are generally not a good investment. Especially when you're young and you got a lot of years to invest. Not a good option. Okay. Variable universal sometimes will allow you to move some of that money into a separate account that you can then actually invest in the market. But again, it's all controlled through this insurance company, and it's just generally not a good deal. And again, I'm always going to say, don't trust me. Just look into it for yourself. I'm just trying to kind of pass the message, right? This is something I've always been kind of passionate about. I've always bought term insurance and tried to take my savings and invest those separately. You have control over both of those. If I die, my beneficiary is going to get my death benefit and they're going to get my investments. See? You get both. If you just have a lousy whole life policy, you don't get both. You get one or the other. That's the way they're all structured. So if you were sold a whole life policy or a universal life policy or a variable universal life policy 10 or 20 years ago, man, I would cash that thing out as fast as you can. As fast as you can say life insurance. Because it's a raw deal, it's a bad deal, and if you've held it for a long time, you're probably going to have a significant amount of savings built up. I would cash that thing out as fast as you can, and if you still need life insurance, and here's the other thing, what's life insurance for? Life insurance is supposed to be a temporary need, mainly when you're young, if you're married, have kids, you don't have a lot of money saved. Life insurance bridges the gap where if you happen to die young or prematurely, I don't think nobody dies prematurely. We all die when we die, right? So, but if you die young and you don't want to leave your family with a bunch of bills and no income, right? If they're relying on your income. So life insurance is it's an income replacement. It's for income replacement. When you get older, say you get to be 50, 55, 60, you get closer to retirement. Say you got a nice little nest egg saved up. Say you got a 401k or you got retirement money. Well, your need for life insurance has gone way down, right? So why would I hold life insurance until I'm 65 or 70? It doesn't make any sense, If you've got a whole life policy and you're a little older, man, cash that thing out. Take that money, put it in savings, put it in investments. And if you still feel like you need a little life insurance, go buy yourself a term policy. They're cheap, dude. They are cheap. Let me tell you, even if you get a little older, especially if you don't smoke, and you're in relatively decent health, they may have to run a blood test, but I renewed a 10-year life insurance policy, a term life insurance policy about 7-8 years ago. I think I paid $400 a year for it. And it's $500,000 of coverage. $500,000. And the term insurance markets are getting so competitive now that it's just cheap. It's just cheap. And I'm not going to recommend a place to go. There's tons of them out there. You can apply online now. Term insurance, it's cheap. It's cheap. I've been paying $400 a year. So whatever that works out to, that's like, what? Not even $50 a month? Is that $50 a month? No, it's less than that. It's like $35 a month. Yeah. But I pay it annually because it's so cheap. I just write a check once a year and it's done. So, so again, sorry for my little frog voice here, but I'm not used to talking this much. Bottom line, if you got a crappy whole life insurance policy, get rid of that thing today. Call up your life insurance company and say, this thing's a raw deal. Or better yet, read your policy. And I guarantee you, if you've never read your policy, gone through and read what I'm talking about, you'll find all that stuff's in there. If it's a whole life policy, it's a bad deal. Cash it out, take the money, save it, invest it somewhere else, someplace where you control it and the insurance company doesn't control it. If you still need life insurance, go get yourself a cheap term policy to bridge the gap, to cover your loved ones or dependents for that time that you need life insurance. That's the best way to do it. Thanks for watching. I'm out.